Okay, this will be a quick recap of the end of the week here. Thursday and Friday. Thursday did gap down below the trend line I had marked on my previous video. Anytime that I have a support level that I'm watching, whether it be a price level, a trend line, a moving average, whatever the case may be, if price action fails below it, I'm immediately thinking it's a potential failed breakdown, which means price action will go down and pop right back up through it. Now, it did do that, however, it wasn't until the next day. So with that said, what I ended up taking was 152.5 calls right here as price action reclaimed the VWAP right here, got in at 129. Now my stop loss did stay down here for the whole day. That was quite a bit more than what I probably should have taken. It was almost one full delta on that contract. But I was pretty confident that based on this candlestick and the 15-minute time frame, the way it was looking, that we were going to have a nice little climb up, either the end of the day or the next day. And as it turned out, price action gapped up over back into this pattern, back above the trend line and the 8-period EMA over here on the daily time frame. Anytime that happens, I'm immediately thinking gap and go, buy on the open and put a stop loss just below the opening range low, whether it be the 2-minute or 5-minute basis, depending on what kind of price action does occur. Since I was already in a position, I just simply put my stop loss up here at the bottom and pretty much guaranteed me a profit. As it turns out, got my 100% and just sat on my hands for the rest of the day. Nothing else really to do. Price action did chop around, ran into resistance at the 21 EMA, which was also an example here on Friday. Price action is now pinned between the 8 and 21 EMAs, as well as this previous breakdown level, which it seems to be reclaiming now, which is 154.70-ish to 155 area right in this region. As long as price action stays above there, it should still continue to be bullish. We did end up with somewhat of an inside day on Friday, so a move above here will likely catch some bears on the wrong side of the trade. Especially if you look at this wick right here, you'll notice there was a heavy amount of selling up here at 155.5. If price action does take that out, very likely going to force some bears to close their short positions because the next level up is pretty far away, which is the 157.60 to about 158, which is the 50-day simple moving average. New notes I do have here on the chart are a couple levels here. I'm going to look for long above 155.40 for that price target of 157.5 to 158. I'm going to go ahead and put that up here. Oh, look at that. I already got it over here. I'm just going to slide it on over right up there. Just because I have my level up there doesn't mean I will close it right away. I'll just kind of wait and see what price action does around there. If it runs up that way that fast, I'll very likely hit 100% too fast and just take it out for 100% gain. But that's only if there's a confirmed breakout above that 155.40 level right in this region here. Basically looking at a break above this 21 period exponential, which will probably open up right around where it's at right now, 155.60. So I'm going to try and get in a little bit before that break. We'll see what happens. If that does not occur, price action opens up lower. I'm looking at a support entry right here around 154.75, which is this previous breakdown level, as well as the 8-period exponential moving average should come up a little bit higher on the open for Monday. Those are going to be the two levels that I'm watching. If it does gap down, maybe look for a level down here around 153.5, but this kind of strong move up, they caught some people on the wrong side, caught some bears on the wrong side, probably not going to retrace through there again. So I'm just going to stick with these two entries right now, and we'll see what happens on Monday. This will be my plan going forward. Good luck.